everyone. Welcome back to the channel. This is Fair Value Finder, and today we are looking at Realty Income Corporation, ticker O, the monthly dividend stock. This is a stock that I've held for quite some time. I've held a few different real estate investment trusts, and this is by far the best one that I have come across. They are very consistent with their dividend, and they actually hold up and grow in value, unlike some of the others, which I got sucked into yield traps on. So let's take a look at this one and see where it's going from here, what we can expect from the stock. We see that we are currently riding an uptrend. Well, we're kind of trading in a wedge. We have an uptrend since the bottom in March of 2020 and a downtrend from the peak in February of 2020. So there was a massive drop off in that February to March timeframe, and we've been trading within the range of that drop since. This stock seems to really enjoy trading between $55 and $75, and it currently sits after hours at $61.44, up 0.77% off of these earnings that just came out. So after taking a look at that, let's look at the financials for the company and see what a fair value of this stock would look like. And here we have the financials for the company. We see that they have a very strong top line revenue growth, moving from nearly 1.5 to 3.3 in the time period that we are looking at from 2019 to 2022, which gives us a compound annual growth rate of nearly 31%. Last year's change was nearly 61. The cost of goods, this is up a little bit higher, mostly on par with revenue. It's a red flag because with 31% growth in the revenue, we see nearly 37% growth in the cost of goods. Gross profit, incredible growth in line with the top line growth. Net income, we see slightly lower growth, which means that the expenses are growing at a decent rate as well. But we see nearly 26%, which is very good growth. The expenses here, we see growth of almost 40%. Which is something that needs to be brought in under control. An EBIT of nearly 21% growth. And then our gross profit, incredible. Net profit, also very good. Both of those small declines, almost flat on the gross profit, and the net profit percentage has dropped almost 4% on an annual basis. And then we end up with earnings per share growth of just shy of 1% year over year. We did see a big drop in 2021. Analysts are expecting them to come in at 138 this year, which is where they came in back in 2019 and just shy of where they came in this year. With the massive growth that they see and the fact that they're a real estate investment trust, they have a very high PE. As we can see down here in 2019, they closed the year with 52 trailing 12 months, 2021, 82, and 2022, nearly 45. So that gives us an average of those, almost 60. And currently the stock trades at 43. So to hit its average, we'd be looking at a share price in the low 80s. And then forward looking with those analyst expectations, just slightly lower at $82. Assets, we see incredible growth, just like the top line revenue. And liabilities, we see growth not as large as the assets. That is something that we really like to see. I mean, we don't like the fact that it's up, but the fact that the assets are outgrowing, it is in the real estate space. You do have to take out debt, buy buildings to make money. The book value, we have very high positive book values, something that we like to see. Good growth in the 30s, just like everything else that we've been looking at. So that for that kind of book value, $90 a share would not be unheard of. And if they can continue growing at this pace, it'd be more like 120. Their free cash flow is high and growing, nearly 11% a year. And we are looking at a share price of in the high 70s. This says 77.66. And if they're able to continue at this pace, $135 looking forward. The share count, this has been increasing significantly, and that is the one area of concern that I have. They're able to grow all of these numbers at incredible rates, but the fact that they're growing the share count means that as a shareholder, you don't really get to experience any of that growth. It's just spread out between issuance of new shares and diluted. And then the shareholder equity is growing significantly. I mean, it's jumped from 9.7 to 28.7 in this time frame. The dividend, they are a huge dividend payer. They pay out every single month, and they currently yield almost 4.9%, paying $2.98 a year. They pride themselves on this dividend. They call themselves the monthly dividend company, and they legally have to pay out a majority of the money that they bring in as a real estate investment trust. I've always said that this company is very good in the $60 range. From $60 to $70, that's when I love to buy it up. Where it currently sits, I have my account set up that I buy some of this company every single day, and I've seen some impressive growth in the dividends that it pays out every single month. And based on these numbers, I would say that it's probably undervalued based on the market standards, maybe for the financials and the balance sheet. The fact that they can't drive earnings per share growth is the one thing that's really holding them down. Maybe a hold. Hold to weak buy. I'm going to continue buying. I just buy it because of the consistency of the dividend and dividend growth, but also the share price tends to stay around the same level. So you get a pretty high return on some relatively safe cash. And with that, let's move on to these earnings and see what is going on there. And here we have the press release. So we see the company's highlights here. Net income available to common stockholders of $225 million or $34 per share. Excuse me. Normalized FFO per share increased 2% to $1.04 compared to the 3 months ending March 31st, 2022. AFFO available to common stockholders was $650 million or 98 cents per share. They invested $1.7 billion in 339 properties and properties under development at an initial weighted average cash lease yield of 7%. Raised $804.4 million in the sale of common stock, primarily through at the market program, with a weighted average of $63.31. And you have it right there that they use the issuance of this stock to raise cash to help them acquire more real estate and pay out more to their shareholders. The whole purpose of the real estate investment trust is you technically own a small portion of this real estate that's paying rent on a monthly basis, and they're managing it. entered a $1 billion multi-currency unsecured term loan initially maturing in 2024, which includes two 12-month extension options. So we'll see how that goes over. Issued $500 million of 5% senior unsecured notes. It's a lot of debt issuance here. Signed a definitive agreement to acquire a 415 single-tenant convenience store property located in the U.S. from EG Group for $1.5 billion. In April, issued $400 million of unsecured notes. But here's what we really want to see. We see total revenue. They are still incredible growth from first quarter of 2022 to the first quarter of 2021, a jump from 807 to 944. Net income available to stockholders is up over 10%, which is pretty well in line with how they typically perform. Net income per share of 34 cents. Funds from operations available to stockholders, 684, up from 601. FFO per share, 103 compared to 101. Normalized funds from operations, 685 compared to 607. Here's one thing to take a look at, a theater industry update. As for the period from January 2023 to April 2023, we collected all of the contractual rent across our theater portfolio. So they're not seeing anyone not capable of paying their rent within that portion of the portfolio, and have cumulative reserves of $33 million on properties leased to Cineworld Group PLC and its affiliates. They're not worried about weakness in the theater industry. Dividend increases. In March 2023, they announced their 102nd consecutive quarterly dividend increase, which was the 120th increase since the listing on the stock exchange in 1994. The annualized dividend amount as of March 31st is $3.06 per share. The amount of monthly dividends paid by share increased 1.6% to 0.7515 during the 3 months ending March 31st. So I still need to update my number on the spreadsheet. It's even higher than that $2.98 that we were looking at. Apparently it is $3.06. So let me adjust that and we'll see what yield that is fetching. That is a 5.02% dividend yield. A real estate portfolio update. Owned or held interest in 12,492 properties, leased to 1,259 clients in 84 different industries. So they are very diversified in their portfolio. So the properties that they had available for lease at the end of last year were 126. 192 leases expired. Released to the same client, 155. Releases to a new client, 6. And vacant dispositions, 26, which leaves 131 properties available for lease as of the end of the quarter, up just slightly from where it was at the end of last year, the start of the quarter. They're able to raise these rents as well. They say that the new annualized contractual rent on these releases is $36.1 million compared to the previous annual rent of $35.5 million. So these leases came to expiration and they were able to lock in the same tenants, making over $500,000 more. Here we can see their acquisitions. So they acquired 217 new properties, mostly in the US, 197 of which were there, and 20 in Europe. Investing almost $1.5 billion, and they have an initial weighted average cash lease yield of 7.2% on this. They're developing 122 properties and will have 6% cash lease yield on that for a total of 339 total properties, yielding 7%. Same store rental revenue, we see it's up 0.2. Their existing stores have gone from paying them $718 last quarter, or the first quarter of last year, to $719.7 this quarter. The net income per share. So they've adjusted their net income per share from $1.20 to $1.22 on the low end, and they held on the high end. They rose normalized FFO per share on both ends, 4 cents on the low end and 2 cents on the high end. AFFO per share rose 1 cent on the low end, held on the high end. Same store rent growth held steady at 1.25%. They still expect to have over 98% of units occupied. Property expenses are expected to be slightly lower, still holding 1% on the low end, but dropping from 1.5 to 1.4 on the high end. Income tax held. Acquisition volume. So they plan to acquire another $1 billion more than they had previously. And here we get into the pure financial numbers. So top line revenue, we see growing from nearly 800,000 to 925,000. Impressive growth. That's how they keep coming in. After adding an other, we end up with 807 moving to 944. So they've grown their revenue from other sources than just rental as well. Expenses, total expenses have moved up from 609 to 724. And that gives us an income before taxes up from 211 to 238. A net income up from 200 to 226. I mean, there's no red flags that I see here. My one issue would be all this issuance of debt, but this is the real estate world. So I know I own properties that I have to pay on, and the returns that you can earn in real estate and the leverage that you can get is so powerful. And that's all. So, as I said when we looked at the financials, I still feel like this stock is a hold, if not buy. My one concern would be the issuance of new stock. They do have that line of credit that they can tap into, and they have treasury that they tapped into. So they've got a few different ways to get cash, and they just keep acquiring and growing that revenue, which is what we like to see. So I'm going to keep holding this as my real estate exposure. I might look into Vici as well, because Vici is very different. They deal mostly in casinos in Vegas, and I want to dive into those numbers and see if it's worth adding to my portfolio, since I've heard a lot about it, but I don't currently own any. So keep an eye out for that video coming soon. Thank you guys for watching, especially if you made it this far. Please like, comment, subscribe. Let me know what you want to see, and I will catch you guys next time.